Hey there, everybody. David Floyd here with Aspen Trading Group. I am back with another edition of the Big Four, and we have got a lot to talk about given the volatility over the last couple of weeks and over the price action, not only today, but what we saw last week. Don't think this correction lower, and I'm hesitant to call it a correction, but the move lower that we've seen from the April highs is quite complete yet. I think looking at the early session this morning, it looked as though we were probably about to break higher and sustain ourselves, but we did not. And what I did with this particular chart today is I added in the wave count, which is something I haven't done in a while, but I'm going back to it just to kind of test it against using it to against the levels that I'm using to see if we can get some confluence. And I'm actually finding it quite helpful, to be honest. So coming into today, we hadn't quite made a new low last week, bottomed out here on Friday, and then kind of meandered higher over the weekend. And what I put in the morning report is unless we broke below this trend line, which we did, but then came ripping right back forward, we were probably going to go a little bit lower and go back and retest this. We moved higher. I think all we have at this point in time, quite frankly, is a wave 4 correction that's undergoing. So I'm labeling this at the present time as just simply that, a correction. Now, if we get back above, let's say this 50.85, I think that's the exact number. Where's my pointer? There it is. I'm sorry, 50.93, 50.95. We get back above here, I think that whole scenario has been negated. However, what I find quite interesting was this reversal at the end of the day. Again, doesn't mean that I'm uber bearish, but it keeps me leaning on the bear side of the equation. So until further notice, I'm a little bit hesitant to chase any rallies here. Not that I did chase them, but I'm not really sure based on the wave count and based on the fact that we still have an overall lower trend in place. We could easily dip a little bit lower before we find our footing. So on an intraday basis, obviously that can change hour to hour, 15 minute to 15 minutes. But if you're looking for swing trades in here, I think the market's still a bit too unsure of itself. I think if we can hold up here and maybe move sideways for a little bit and complete this correction, I think that the next move is going to be the downside. And it's going to head back down towards this 49.60 level, give or take. So that would be my take. If I had to place some money on the table, I'd be leaning on the bearish side of things. Now, for those of you that don't trade it very often, I might suggest taking a look. Oh, shoot, I don't have that particular tab in here. Dang it, I was hoping I did. Let's move on to 10-year notes. 10-year notes, not similar, but somewhat similar position. I don't think we've bottomed out on a longer term basis, but I do think that this level that I'd been talking about all last week down in here, 107.16, is done exactly, or 107.18 actually, is done exactly what you would expect a solid level to do. It's prevented the price action from going much lower. However, that does not mean that I'm a raging bull. I do think that we have limited upside because none of these moves thus far are impulsive. So I think we probably just get some sideways action. Maybe we get a little bit higher up towards 109. But ultimately, I still think that we're going to be moving lower unless something changes within the 10-year note market. So just be cautious of that. We're moving sideways, kind of marking time. So I do think, we could see A, B, and C to complete 4. Or we could just see some sort of a sideways chop in a contracting triangle that ultimately then breaks lower. So my line in the sand really is about that 107.18 level. We get back below 107.18, and I think we start to we do a couple things. One, we're looking for lower levels, but we can also then maybe call the completion of wave 4. Let's just say it's there. Let's say tomorrow morning we wake up, prices haven't moved higher overnight. We break back below 107.18. Wave 4 is complete. We're now moving down in wave 2. We're heading into the mid 106s. That's how I would see 10-year notes playing out. All right, moving right along. the euro. Tough here. Just sideways and choppy. And again, given that the trend is down, we just need to assume that this sideways chop will continue and then perhaps continue to the downside. So euro is not overly complicated. It's pretty straightforward. As long as we hold above this 106.50, it's possible we could get a push higher. But I think the better play, given the fact that we've had this steep sell-off and we have barely rebounded, the market's telling you that it's not terribly interested in bidding prices higher. So the next logical move is going to be to the downside. So there you have it. So the big four, actually it turned out to be the big three this week, because I don't have the file I have that I'm looking for on here either for the Aussie dollar futures or dollar yen. There is a dollar yen here, as you can see, but that's not the one that I had worked up prior to shooting this video. So you've got information on the S&Ps, information on 10-year notes, and information on euro futures. I'll be back next week with another update. Have a great day.